GetCrack. Wake up, motherfucker.
Yo, hello. It's February 2nd. Okay. All right. Let's go. Let's get to it. Yeah, I just use AI. I ain't using no Photoshop or anything. I'm not gonna waste my time with effort on that. I just use a Grok or the Nano Banana. I think it's Nano Banana. Or is it Banana Nano? Whatever the Google one is. All right, let's go. Let's do this. So, pretty disappointed today. Like, we didn't get any action during the day. All the action was during overnight, Sunday into Monday, European time, Asian hours. If you were playing futures, it was amazing. If you didn't play futures, forget it. There was nothing to play. By the time the market opened, regular US hours, it was already over. The drop that we should have gotten into today was already finished, and we bounced right back up. So nothing to do, really. So that's very disappointing. Very disappointing. Anyhow, okay, I'm sure Google will integrate Gemini into YouTube so channels can. Yeah, they probably will. StreamYard has an AI thumbnail generator already. They already have AI clip makers. Everybody's doing that. It's like something they'll just do naturally, right? So it's easy. It's easy. Now, can we get AI to do our trading for us and all that stuff? That's the question, right? I'm sure people already have developed bots and things. I need AI to analyze charts for me, find patterns that I don't want to waste my time doing, and then find me the best trades every day. So that's what we're going to talk about today. Okay, let's see. Let's get it going here. That's what we're going to talk today. Okay, let me see. All right. So the first thing I want to talk about is let's go back and go to the basics. Let's do some math. There are 250 trading days a year. So about 62 trading days a quarter. So this is if you only trade during normal US hours. So about 20 trades a quarter. Okay, I'm going to say. Meaning that I'm not going to trade one trade every day. I'm not going to do multiple trades per day. I'm going to do one trade over several days, maybe a week, right? So let's say I do 20 trades a quarter, only 20 trades. I limit myself. Now, let's say I can achieve 10% gain per trade. And every time I make that profit, I put all of that plus the profit back into the next trade. Okay, let's say I start with $1,000. Okay, and you're going to be like, well, come on, 10%? That sounds pathetically low. Well, that's the power of compounding. Okay, let me zoom in here for you guys. Let me see. Man, I can't. I guess that's as much as I can zoom in. Okay. Now, at the end of the quarter, I reset back to 1,000 starting point. Okay. So I have 4 quarters in a year. This is what I do. And this essentially is how I do things, how I treat things. Like every quarter, I go back and take out my profits and go back to the starting point. That's how I do it. Now, let's say total profit for the year. 4 times 1,000 times 1.1 to the power of 20. Okay, so that's where you get the 20 trades, get the 10%, get the 1,000. You put this in the math, you got $22,910 at the end of every year, okay, as your profit. This is your profit. Not bad, right? $1,000 turns into $22,910. And I just need to get 10%. And getting 10% consistently on each trade is very, hard. So you would think like maybe I just get one good trade every quarter and make it like 100%, right? Or something like that. Or do I do very small trades and do a lot of them? Like I do 2% gains and I do maybe 40 trades a quarter or something like that. Okay, you can do that. Well, I'll give it to you like this. So I can just turn X equals 1000, G equals 0.10, K equals 20. So you can change those numbers to whatever you want. You can do like $2,000 or 5,000, and then you can change it to 0.02 for 2%. And then you change your K to something else. And then you can see how it goes. Now, this is ideal, right? This is ideal. These are the ideal cases. So, but this gives you an example of like what is the ideal for a trader. All right, now let's go on from here. I could do some math for you. So I pull out my graphing calculator, do some math. Yeah, I need to make money trading, so I'm not. So this is what happens if you quit your job. This is what I did. So in 2018, I retired. I basically said, I ain't doing no more of this bullshit. I am going to learn trading. That's what happened in 2018. Okay. And I decided, well, I already made a lot of money doing investments. Investments meaning I bought stocks over many years, right? Like Tesla, AMD, blah, 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 whoever. And I had a whole bunch of other ones from way back when. That's fine. That's fine. That's perfectly fine. But once you quit your job and you still want some kind of income, how are you going to do it? Well, you could hope that every year in the S&P 500 goes up 10% so that you make something. That's not always the case, right? Some years you go down, some years you go up. We've been very fortunate since 2008 that for the most part, if you played tech, they've gone up. We're entering a point where this may not be possible. You can't rely on just buying Microsoft, Google, Apple, and Nvidia and all that and just hope they just go up steadily in a straight line. They don't do that. They don't go up in a straight line. So you can't just take profits from time to time to make your quote unquote income, right? That's not a guarantee. So we have to do it this way. Now, again, this is all ideal, right? So I could just change my, parameters here and then do this and that. And I could see like how much I can get. So I could change my G here. So let's say 2%. Let's say every trade I make, I get 2%. All right. If that's even possible. Of course, you'll be trading all the time. And then one trade, you'll be down 1%. The next trade, you might be up 3%. Next trade might be down 2%. Next trade might be up 5%. But let's say on average, they all average out to be 2%. I don't know if that's even possible because like going up and down, fluctuating like that will change everything we're doing here. But let's ignore that for now because this is just a thinking, right? This is just a thought process, a kind of mental game we're doing here to see what's possible in the ideal world. Okay, so I put it 0.2. I keep it at 20 trades a quarter, so I can make about 194%. Okay, at the end of the year. Not bad. That's great. That's amazing. And then you got this purple line, which shows you what you would make, right? Depending on dollar amount. So let's say I do 1,000, then that's what I'll get. If I start smaller, then that's what I'll get at the end of the year. Okay, so that's it. So you can just play this game. You can go to desmos.com and you can play with this. Now, we have to realize this is not reality. It's not reality. We are gambling. So what's the probabilities? Now, you can use something called the Kelly criterion. This is used in many places. Gamblers especially will use this concept. And I think there's a lot of articles, papers, academic papers, all kinds of stuff about like what is the correct sizing that I should do my bets. Okay, where I can optimally get a gain towards the end of all my betting. So let's play a game. I have a coin that lands heads 60% of the time and tails 40% of the time. You have $25 and can bet on either side of the coin. Every time you're right, you double your bet. And every time you're wrong, you lose it. What would your betting strategy be? Try your luck. Okay, so should I go all in and see if I can get up there fast enough, or is this stupid? You probably already know this is stupid. So based on the fact that it's 40%, 60%, what's the ideal case then? What should I do? Should I set it at $5? I don't know. All right, let's set it at $2 or something like that, around $2. $2.16. Let's go. Let's bet heads over and over again. So this is my game plan. I'm never gonna bet tails. I'm just gonna keep betting heads and see how it goes. Oh shit, I lost. Damn. So how long will I get a profit here? How long will it take? Okay, I'm getting somewhere. I'm finally getting somewhere. All right. Keep going. All right, I think you get the idea, right? I think you get the idea. Because let's say I do this instead. I bet bigger. I bet $15 or something around here. All right, let's see. Heads. Shit, I lost. Oh, see? This is why I said, like, well, how much percent will I get every trade? You know, you guys always like kind of always want these big bets, and I get like 1,000%. Yeah, let's do that. I go play options and I get 1,000% gains each time. No, this is how you blow up your account. That's how you blow up your account, thinking like that. Okay, so if I can improve my odds, instead of 60 and 40, how about like 90 and 10? You know, that will also improve my betting chances of making money. So this is what doing technical analysis can do for you. Most basic technical analysis is no better than probably 60-40. Like, I see a pattern, I see like, oh yeah, okay, this pattern appears this way, so that means the stock will do such and such. But that's not a 100% guarantee. Not at all. So just like last week, I saw that bar on gold and silver. Would I have taken the bet to short the day before that crash happened? So what is the probability of that pattern showing up being fulfilled, right? And by how much? Would it be a big drop, a small drop? I don't even know what kind of profit I would make on it. So these questions have to be answered before I can go back here and improve this ideal scenario, because this is just an ideal scenario where 100% of the time I get some percentage gain. That's not the case. It's going to be like this, where it's just like zigzag. So this mental exercise we did here is pointless. Okay, it just shows you that you can quit your job quite easily with just $1,000 and turn it into like a 23 bagger. Like, if everybody could do this, they just all be day traders. But we also know the fact that like most day traders never win. So this is why like we have to work on improving something here. We have to do better than people that normally read charts or normally just like look at the news or normally just that's not going to happen. It's not going to work unless you got insider trading all the time info, or you're cheating. Basically, you're stacking the deck. Like, who knows? Like the silver stuff, metal commodities trading is easily manipulated in the futures market, especially by the big bankers. They've been caught before. JP Morgan has been caught before. Goldman Sachs has been caught before, but every time they get caught, the traders at the desk get a slap on the wrist by the SEC. The company just denies any knowledge of it, and they move on their merry way and take your money. That's how the game is played. All right. You either say like, well, if it's rigged, why do I bother playing it? It doesn't matter if it's rigged or not. The odds of me making money in the stock market is still way better. Way better than the casino. Casino, they stack it immediately and tell you exactly what's going to happen. You're going to lose if you keep staying in the casino. But in the stock market, there's a chance a little guy like you and me can make it, because it's designed to go up. So, as long as you know that fact and you know certain other things, you just need to beat the stupid bear. You don't need to beat everyone. I'm not going to beat Goldman Sachs. I'm not going to beat JP Morgan. I'm not going to beat Druckenmiller, Soros. I'm not going to beat any of those guys. But I just need to beat the mom and pop. I just need to beat the dumbass on the street. Like, in general, those guys will lose and you can grab their money. That's basically it, because it's just a game. All right. And all you got to do is be smarter than the average bear. As long as you're smarter than the average bear, you can make money. All right, that's it. Not saying I quit, saying AI might roast it. Yeah, AI will roast it. AI is probably going to roast it. And those big guys already have AI probably in the models. So that's why you have to have a better model than they do. So even though they have AI, if their model is not as good as your model, that's all you need. So what are the models we're using? We're using cycles. We're using these and that. This is why it's important to have these things, because this gives you an advantage. All right. Advantage that most people don't have. Let's see. Blah, 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 blah. Man, I got to go find all this shit again. All right. Hold on. I got to go find some other shits here. Let me see. Okay. I got some screenshots I'm going to share with you guys. If I can find them. Okay. All right. Okay. Start with this one. Okay, let's see. All right. Got it. So, this is an hourly cycle chart. Now, usually I never play with these hourly ones, but we have technology now that can do this. So here is what the model says, this pink line, right? Or magenta, whatever color it is. Look how well it followed the Bitcoin. So after the 13th, it followed that magenta line pretty well. Now, you see that last drop? That wasn't predicted. That wasn't really predicted. If it was predicted, it came a little bit earlier than what was suggested by this model. Okay, so we're getting close. We're getting close to figuring things out here. All right. Now, let's look at something else. Let me look at something else. Okay. Let's see. Okay, get this one. All right. So, this is what was happening Sunday night. All right. Now, this is what the updated model looks like. It said we should be going up until the 8th. Now, will the next week follow this model? Yes, it is always changing. That is true. That is why it's not going to be fixed. But it gave us a better opportunity of figuring things out than those other guys. You are now smarter than the average bear. You see? It wasn't 100% right all the way through a week, but it was mostly right. And mostly right is still good enough to me. And that's when you know the probabilities, right? What are the probabilities of something happening? Now you know that. Before, it was just random noise to you and me. Random noise means I can't bet. How can I bet on something where I have no idea what the odds are? Now the odds I know. The odds are that Bitcoin is going to go up from here up to the 8th. And what happens on the 8th? The 8th is the elections of the Japanese parliament. So we will have elections on Sunday, which will have spillover effects into the next week. So we will have a nice recovery into the 8th before continuing our crash down. So what does that mean? That means I'm getting ready to short again MSTR, right? I sold my MSTZ ETF, so that means I covered my short at the open in the morning. Too bad. It could have been like a nice 20% gain. It was just a 14% gain. Oh well, I'm out of it. So what should we do now? We should look for other opportunities, other times when we could short and continue the trend down, because the trend is going down. All right, so let's see. I'll show you this here. Let me see. Get this crap up. And then we can move on. And I can play some videos or something here. So here's the current daily chart. We should have been moving up sometime this year, right? But we haven't had that. Now, having these pink, whatever, going down and up doesn't necessarily mean the price is going to down and up. All that means is the likelihood of it going up is higher than going down. But there is a chance we just keep going sideways, right? Up until sometime in April before continuing down. So I'm still thinking the big short in Bitcoin won't come much later, okay? But then again, I might be surprised and see if the NASDAQ collapses and takes everything down with it. All bets are off once the NASDAQ can't hold its liquor. If it starts throwing up, then forget Bitcoin. Bitcoin's going to follow it. Bitcoin's correlation to the NASDAQ is very high right now. Very high. It's not decoupled at all. And now with silver and gold kind of weakening and then oil at play, yeah, I think all the markets are tied together. And they call that financialization, okay? So let me see if there's like, okay, let's see what Google says. What's the Google AI say about financialization of the market? So what does that mean? Financialization, the increasing dominance of financial markets, institutions, and actors over the real economy. See here, real economy has changed modern capitalism. It prioritizes shareholder value, increases debt, and shifts profit making from production to financial trading. It affects households through increased debt and corporations via the financialization of strategy. Key aspects of market financialization include dominance of the financial sector relative to the real economy, corporate management driven by stock market performance and shareholder returns, growth of financial assets in proportion to other types of assets, increased presence of financial investors in commodity markets. Bing, 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 bing. So if you think silver and gold prices reflect supply and demand, that's probably not the case. It just means a bunch of people are just goofing off in there and manipulating the prices for the hell of it. Non-financial corporations shifting towards financial activities such as buying back shares. Yeah, that's a big one too, right? We discussed a little bit of that from time to time. The last time I discussed it was when I read that Russell whatever Clark, I think his last name was, article, blog post. So what's the consequences? Increased income inequality. We got that. Wage stagnation. We got that. A focus on short-term financial gains. We got that. Leading to lower investment in long-term projects. Got that. Higher levels of debt and interconnectedness, which can increase systemic risks. We definitely got that. People are getting loans from Japan to get yen, using that yen to buy Mexican bonds, using the interest that they get from Mexican bonds to buy stocks in the United States. All right, changes in the impact of monetary policy, whatever, blah, blah, blah. Okay, now you understand? Now you understand why everything is a problem now? Yeah. I wonder what happened if the similar could switch probably every... Yeah, I mean, there are. So that one is just a toy example, okay, that people... it's just a simplified example. You can go to other websites. They have the formula fully, and you can fully adjust it and play around with it, and you can go deeper into the math. And there's other criterions too, because like some people say, yeah, the Kelly criterion is too simple, and they have even more higher advanced mathematics. You can see the theory here, right? Expected value. So if you know about probabilities, you know about expected values, you can compare strategies, blah, blah, blah. Here's a table. So, and you can you know, here you go. You can have fun with this. This website's pretty cool. So it's in the description. So you can go to the description, go here and figure it all out. See, he does all this stuff. Nice, very nice, right? Here you go. And you can have something else there. But yeah, you can take all this information, make your own thing where it's not 60-40, and you can figure out what is the optimum there. And it's all mathematical. So, but again, it's just ideal cases, right? In general, it seems like smaller amount gives a percent chance to increase instead of going exponentially negative quickly. That's correct. That was just the whole thing. So that was just an example of it. All right, we're done with that. Okay, let's move on. Let's see what else. Okay, let me talk about George Soros for a little bit. So I mentioned this example before. George Soros's theory of reflexivity, okay, is based on the idea that investors base their decisions on their perceptions of reality rather than reality itself. Okay, I hope you get that. This feedback loop between expectations and economic fundamentals can cause price changes that substantially and persistently deviate from equilibrium prices. So if you look at this chart, what does this remind you of? That's called a bubble. So that's why bubbles are the best time to make money, because everyone's a moron and you rely on that to make a lot of money. This is what George Soros loves to see. If you see people buying up silver and gold like maniacs, guess what? I love you. It's going to keep going up and up and up and up and up and up until it doesn't. That's the problem. Soros believes that reflexivity contradicts most of mainstream economic theory and can significantly shift our understanding of economics under modern economic models. He explains that if investors believe that markets are efficient, that belief will change the way they invest, and that in turn will change the nature of the markets they are observing. Soros views the global financial crisis as an illustration of that theory. Okay, so if you believe in fundamentals and efficient market, then the stock price should match the earnings per share. Obviously, it doesn't work that way in reality, right? Otherwise, we wouldn't see crazy prices like SanDisk and whatever. Let's look at some stocks here. Small and mid-cap speculative AI. So which stocks have been doing well since the start of the year? APLD up 40.92%, an AI stock. IREN, a Bitcoin mining turned into an AI stock, up 40.53%. CoreWeave, another type of AI stock that's related to data centers, 24.2%. HUT, this is what I was in, up 22.29%. On and on and on. So, does it deserve that kind of gain in 1 month? It's just been a month for the year, so should it be up 40%? I don't know. But I bet you this is what it is. It's just reflexivity. People just love AI and they believe the theory, right? They believe the story. So they expect it to always go up, and therefore they will keep buying it up. Yeah. All right. Let me do this for you guys. Let me do an example. Okay. Let me do an example here. Let's look at stocks and how they perform versus the S&P 500. So I'm using this scanner to look for stocks that can beat the S&P 500 so far, that have good runs. So I'm doing a performance scan here. So I'm going to look for charts that show good performance. So does this look familiar? Does SanDisk look familiar? So flash memory prices have been going up. This one is beating the S&P 500 by 44%. Okay. So here you go. This is a bubble or not? I don't know. It just had earnings. Seems like it wants to keep the price up that high. So today it was up 15%. On Friday, when it had earnings, it was up 15%, and it went all the way down and lost it all. Then on Monday, it just went back up 15%. After all that bloody red noise on Sunday night, it was over. By the time the market opened, everything was fine. Everything was fine. No attack on Iran. No issues. Nothing. Trump didn't say anything crazier. No, nobody cared. Oh, government shutdown, whatever. Done. So it was just noise. And you can trade noise if you can. So that's one thing. What's the next one's up? Pretty familiar names. You got Micron here. This is like a 2x leverage of Micron. So it's just basically Micron times 2. You have one gold miner, silver miner stock. Viavi, I know what this was before. It wasn't a good stock before, but this last year has been doing quite well. So I'm sure it has something to do with AI. They probably said something about AI and pumped it up. Very few other things that look familiar to me. Okay. Oh, Royal Caribbean, right? Royal Caribbean. This one is doing quite well. So I mentioned that last week. Another gold miner, I think, or something like that. Western Digital, Memory. Anything else familiar? Oh, yeah, I mentioned KC. I remember that, right? Chinese cloud computing stock, which I have no clue what they actually do. Texas Instruments. Okay, we know that. Nothing else. Got Brazilian Petro. Oh, this one's doing good. Shit, it's up 50% this year. Wow. Oh, Brazilian oil. So yeah, there's some energy stocks here that we have to look at. We got Lumentum. They'll report earnings. So optical. GameStop. I think there was some news about GameStop. I don't know if it's going to really do anything this year. Okay, yeah, another memory company. This blah, 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 blah. All right. But in general, yeah, very few stocks that will just really beat the S&P 500 completely. Okay, so let me do another thing for you. How about I compare the stocks, okay, of the US to SOXL. SOXL is 3x leverage semiconductor ETF that I use since April. This is pretty much my primary position since then. Okay. And I said my reasoning was that I don't need to think anymore once the breath thrust happened in April, late April. Once that signal triggered, I knew stocks would always go up. So that changes your probabilities, right? So you look at that example with 60-40 for the coin flip. Once you have strong signals showing that the S&P 500 is going to go up 25% in 1 year after that signal, it means that I don't need to worry about a bear market happening in 12 months. So I'm going to pick the most aggressive sector and I'll just leverage that. I'm not going to go around stock picking. I'm just going to do one trade only, major trade only. And if I'm going to do that, I'm going to use as much money as I can. I'm going to dump in it. And that's what I did. I just bought SOXL. Okay. And I kept buying it as it went up until October. Then I started selling bit by bit by bit by bit until last week, where I sold most of the last remaining chunk. And now I'm just waiting for the time to short this guy all the way back down to where it was probably in June or something. So what stocks beat the SOXL over the last quarter? So last 3 months. So let's go and do this. Let's see what stocks would beat it. Very few stocks here. This list is very short. 12 stocks beat it. SanDisk, again, obviously, duh. It beats SOXL by 34%. MUU, 2x leverage of Micron, beats it by 28%. Viavi, one gold mining, silver mining stock, another memory disk maker stock, blah, blah, blah. Very few other ones, right? So that's the reason I picked XOXL. So when we do this kind of work, when I pick stocks in and put it in a portfolio for people, if I'm like a hedge fund or I'm a portfolio manager, I need to beat certain benchmarks, right? Usually people just need to beat the S&P 500. If I want to beat even further other people, other competitors, like, why would you listen to anyone else, you know, unless I could prove that I can beat everyone else? And the only way to do that is you got to find the stocks that can really beat the best performers. And so SOXL was the real benchmark. If you wanted to beat the market from April into pretty much October, November, you need to beat SOXL. That was the one to beat. Okay. And very few stocks beat that benchmark. And the stocks that did beat that benchmark were just basically stocks in that sector, like SanDisk. So this is a really wild outlier, right? This is a very wild outlier. Not many could beat it like that at that level. Okay, now you get it? Yeah, now you get it. That's why I didn't care about gold and silver that much. I was like, whatever, dude. Who cares? Like, you have to really be able to beat semiconductors for me to really consider gold. And I mean, gold and silver definitely did well in the past 3 months, but still not as much as semiconductors did since April. All right. Okay, now you understand. Now we have to look for the next hype. So if semiconductors are about to end, we have to find somewhere else to park our money. That's the problem we face. We always have to rotate our money around and around. We don't keep it at the same spot. We have to find a new opportunity. Are those all still investing in or too late? Yeah, probably too late, bro. We're going to small caps. Small caps is next. Oil is next. That's where we're going next. So that's what the whole topic is today. Where are we going? So we're always rotating to find something new. So now that we know who our next Fed chair is, let's get to it. Let's see what these articles say. Oh, actually, you know, the thumbnail I have for the AI that I made. I'm going to talk about 1966 for a bit here. So, you know, Chinese Lunar New Year will be in a few weeks. All right, in a couple weeks. And it is the year of the horse. And it's the year of the fire horse, actually. So it's a fire horse, not any horse. It's a fire horse. And the last time we had a fire horse was in 1966. So there was a bear market in 1966. Now, does that mean like, okay, I believe in some astrology here, whatever? Well, I mean, I do believe in cycles. There are cycles. There definitely are cycles. Now, does the 12-year lunar cycle align with anything in reality? That's the question you got to ask. I don't know if like looking at the planet Jupiter and seeing where Jupiter is in the along the zodiac will tell you anything. You know, that's where you get your 12 years from. 12 years is when you look at Jupiter and it goes around the sky. All right, let me get my battery here going. Okay. All right, let's read this article. A bear market is defined as an index dropping at least 20% from some previous high. Since 1950, there have been exactly 9 bear markets in the S&P 500 price index, the most common representation of the market. Only one of these dropped over 50%, turning into a stock market crash. Although you might think that bear markets are uncommon, the S&P 500 price index spends 18.19% of the time with losses of 20% or greater for some previous high. Examining past bear markets can help provide some context when we can experience the next one. Okay, the baby bear, the bear market of 1996. On August 29th, 1996, the S&P 500 price index dropped to 74.53, down 20.76% from its prior high on February 9th, 1966. Well, we're about to get to another February 9th, aren't we? And I said the Japanese elections is on the 8th. So maybe that's when we'll start going down. The market had been dropping for 201 days, 6.7 months. It bottomed 93 days later on October 7th, 1966 at 73.2, down 22.18%. Over the next 39 days, 1.3 months, the S&P 500 price index rose and then dropped below the 20% mark once more. After bottoming, the market fully recovered just 209 days, 7 months later, on May 4th, 1967. The entire cycle lasted 449 days, 1.2 years, 240 days from the prior peak to the bottom, and 209 days back to the prior peak. After recovering, the market continued its upward trend for an additional 19 months, 1.6 years. The total 26-month, 2.1 years bull market ultimately peaked on November 29, 1968 at 108.37, up 48.05% from the bottom of the bear market. During the total recovery from the bottom, the markets experienced an annualized return of 20.06%. So for the most part, it didn't do anything, right? It didn't do anything. So most people forgot about this bear market. Okay, here's the chart here. You can take a screen cap of this. This was the smallest bear market since 1950, earning itself the title of baby bear. Although most full recoveries take about twice as long as they spent dropping, this bear market recovered more quickly than usual. It also had the shortest entire cycle of 1.2 years. Here are 4 important lessons from this baby bear. You only needed a couple of years of safe spending in bonds. Having the appropriate bond allocation in retirement to weather the bear market is priceless. All right, blah, 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 blah. So this is just, boomer knowledge, I guess. So this is what you should know about how to weather the bear market. Personally, I would just try to predict where the bear market is going to happen and avoid all of this altogether. But, that's up to you. So here, let me get something else. I have this article here. I didn't put this in the description because I'm just going to read the preamble. All right. So let me see. Okay. You can see this. This is by Ray L. Randall, I guess. L. Randall Ray. Okay. The 1966 financial crisis, a case of Minskian instability. All right, let's see what it says here. The so-called credit crunch of 1966 has long been recognized as the first significant post-war financial crisis and one that required the first important intervention by the Federal Reserve Bank to prevent spread of a crisis. So this is the first time the Fed had to stop something, huh? All right. Thus, the events of 1966 play a significant role in Hyman P. Minsky's analysis of the early post-war transition from a robust financial system toward a fragile financial system. To some extent, 1966 proved to be the first verification of the financial instability hypothesis that Minsky had been developing since the late 1950s, and the events of that year would stimulate further development of his thinking. Similarly, Martin Wolfson begins his analysis of U.S. financial crises with an examination of the 1966 crisis. However, in a recent paper, Professor Dickens argues rather persuasively that during the 3 quarters of a year that preceded the credit crunch of 1966, there was an intra-class conflict. All right, let me remind you, we were reading blogs from Russell Clark. Russell Clark said there's going to be a war between the labor and capital. So people that believe in supporting labor, meaning unions, increasing people's wages, giving people benefits, versus capital, where They try to eliminate everyone and use AI so that they can get the most profit. So there is a battle coming. This sounds very familiar, doesn't it? So the intra-class conflict over the direction of monetary policy, with the large New York banks favoring a coordinated policy of higher interest rates, but lower interest rate ceilings on time deposits, while large regional banks prefer to retain the ceilings out of fear they would otherwise lose deposits to the New York banks. Professor Dickens goes on to argue that the tight money policy, we are in a tight money policy regime right now. Or kind of. It's not really. I mean, the money supply is quite large, so comparing us to 1966 is probably ridiculous in that sense. But for the most part, we are trying to have a tight money policy. At least that's what Powell wants. And now that we have this new guy coming in, he's not as a dove as what people expect. We might still have a tight money policy. Okay. So Professor Dickens goes on to argue that tight money policy was adopted as an alternative to incomes policy as a means of fighting inflation, representing a victory of Wall Street over the administration. Interesting, right? Trump wants to have loose policy. Wall Street wants tight policy. Sounds familiar. And by implication of capital over labor, by confirming the independence of the Federal Reserve. Sounds familiar again. We are having a battle over the independence of the Federal Reserve. To place price stability over full employment as the top priority. All right. That's all you need to see. The Federal Reserve has two main mandates: price stability and full employment. However, if those two priorities go in conflict, you cannot have price stability and full employment at once. We have an issue. We had this issue in 2019. Trump told Powell to lower interest rates, and Powell said no for the same reasons. All right. Actually, the Federal Reserve was quite surprised at that time and could not believe that unemployment kept going down. They didn't believe it. So Trump was right, and the Fed was wrong at that point. And that's what led to the correction in 2018, late 2018, and then the crazy movements going into COVID. Okay, so there is a lot of stuff that happened between 2018 going into COVID. And that's why I don't believe COVID was actually a legitimate reason to shut down things, because it just gave an excuse to reset the computer. Because the Fed couldn't fix the issue and lower the unemployment while raising interest rates, they had to stop raising interest rates. And the only way to get interest rates back up to normal was doing something drastic and killing off the supply side, which the Fed cannot do, but the world can help do, is what reset the system back so that we can keep the bubble going for another few years, which we are doing right now. So anyway, you can probably read this somewhere. I don't know. So this is a working paper number 262, The 1966 Financial Crisis, A Case of Minskian Instability by L. Randall Ray, the Jerome Levy Economics Institute. Whatever. You can go on Google and find this thing. All right. Okay. Anything else I gotta read here? I think we got a lot of other articles to read. Let's get to it. All right, let me change the music. Okay. Let's get here. Trump jokes about suing Warsh if he doesn't lower interest rates. President later says he didn't extract any concessions from the Fed nominee. So he made a joke over the weekend. President Trump joked during a speech Saturday night that he would sue Kevin Warsh, his nominee to chair the Federal Reserve, if he didn't lower interest rates. Trump was the featured speaker at the Alfalfa Club's annual black tie dinner and presented a roast-style speech at the closed-door event. Trump told the group of business leaders and Washington elite that he picked Warsh because he seemed straight from central casting, according to people in the room. Asked about those comments aboard Air Force One later Saturday evening, Trump said, "It's a roast." He said he didn't extract any commitments from Warsh for the nomination. "I could have done that, I guess, if I wanted, but I didn't." Okay, whether that's a joke or not, you can figure that out. What other things happened over the weekend? OPEC Plus met and said no changes. OPEC Plus holds output steady through March despite rising political tensions. OPEC Plus has confirmed it will keep oil production unchanged in March, extending a 3-month supply freeze even as crude prices climb to their highest level in 4 months. The decision was reaffirmed during a video meeting on Sunday by 8 core members of the group led by Saudi Arabia and Russia. The pause was first agreed in November, and delegates said discussion about policy after the first quarter were deferred until the group's next meeting on March 1st. Okay, well, Donald Trump warned that Iran could face military action if it failed to reach a new nuclear agreement. Even so, the alliance opted not to adjust supply, sticking with its usual practice of waiting for concrete changes in physical flows before responding to geopolitical risks. In theory, key OPEC Plus producers still have around 1.2 million barrels a day of output that has been kept offline since 2023. Saudi Arabia and some partners, including the United Arab Emirates, have signaled interest in gradually restoring production, though market conditions may complicate that path. The International Energy Agency expects global oil markets to tip into oversupply as demand growth slows and output continues to rise in non-OPEC producers such as the United States, Brazil, Canada, and Guyana. Several major banks have warned that additional OPEC plus restraint could be needed to prevent prices from sliding. All right, I think that's it. So, yeah, oil went back down over the weekend a bit. So I'm going to look for things to buy. Looks like it's time to look for things to buy. It's time to shop. It's time to shop. Here's another piece of news for Warsh. Goodbye to the Fed put. Wedbush warns of market jitters under a Warsh-led Fed. U.S. equities could face a choppy stretch in the months ahead as investors brace for a potential overhaul of Federal Reserve policy under Kevin Warsh, according to a strategy note from Wedbush Securities. In a February 1st report titled Goodbye Fed Put, Wedbush analyst Sam Basham said President Trump's choice of Warsh at the next Fed chair is likely to unsettle markets in the near term before clarity improves later in the year. No shit. The firm expects volatility to persist until Warsh formally takes the helm in May. Isn't that what I said back in the start of the year? As investors begin to price in what it sees as a decisive break from the Powell-era playbook. Wedbush argues that a Warsh-led Fed could shift its focus away from interest rates toward the size of the central bank's balance sheet, under what the firm calls practical monetarism. The Fed would target money supply rather than the policy rate as its main inflation-fighting tool, draining liquidity through quantitative tightening and shrinking the roughly $6.5 trillion balance sheet. Well, we tried that before, and guess what? The market did not like it. So look up 2018 to 2019. Look at how those markets reacted to such a move, and you'll see what happens. All right, anything else here? Blah, blah, blah. Nothing. Okay, let's move on. All right, this one's interesting. Big investors brace for inflation comeback as rate cut bets look risky. All right, let's see. Some of the world's largest asset managers are repositioning portfolios to guard against a renewed burst of inflation, even as broader markets remain confident that price pressures are contained. Bloomberg News reported Sunday BlackRock has increased short positions in long-dated U.S. Treasuries and UK gilts. That's the UK bond, sovereign bond market. Betting yields could rise if expected rate cuts are delayed. Bridgewater Associates is leaning towards equities over bonds, while Pacific Investment Management Company is favoring inflation-linked treasuries as a hedge. Market signals back up their caution. U.S. inflation break-evens have jumped to multi-month highs, and inflation swaps are pointing to stronger price pressures ahead. Many investors worry that a resilient U.S. economy, higher commodity prices, heavy government borrowing, and surging AI investment could reignite inflation, especially if Kevin Warsh pushes the Federal Reserve toward faster or deeper rate cuts. Some strategists argue an inflationary boom is still underpriced, a scenario that could keep the Fed sidelined early in the year and force markets to price in rate hikes later. That outlook would complicate the start of Warsh's tenure if confirmed, given his reputation as an inflation hawk and political pressure for lower rates. Oh, well, that sounds like 1966, right? Here we go. 1966 is coming. So, yeah, history doesn't rhyme. Doesn't repeat, but it does rhyme. So that's the cliche, right? That's the cliche people say. So we'll see how much of 1966 we are going to see. Anything else here? We read that. All right, here's another one. Xi signals push for yuan reserve status as Beijing eyes bigger role in global finance. Oh boy, here we are. Here's comes China. Xi Jinping has laid out an explicit goal for China's currency, urging that the renminbi, that means the people's money, okay, that's the other name for the yuan, evolve into a widely used international unit that can eventually be held as a reserve currency. In an essay published Saturday in Huixi, the Chinese leader argued that China should build a strong currency that is broadly used across global trade, investment, and foreign exchange markets, and that can ultimately be held by central banks as reserves. Oh, damn. Goodbye dollar. It is almost 100 years since the U.S. became a global power with its reserve currency. So there's 100-year cycles between each reserve currency, and in 20 years we should be over and we're moving on to something else. And is that going to be the Chinese yuan? I don't know. That's another reason to buy up a lot of gold, right? China's been buying up a lot of gold for several years now, and they've been increasing their buying. So they're probably done buying. I don't think anybody wants to buy gold at like 5,000 at this point. So they already bought it at 1,000 or whatever. That's when my mom started buying a bunch of them. So she's already sold most of her stuff out. So we'll buy physical gold some other time. I think we're done here. Blah, 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 blah. Okay. Beijing has spent years promoting wider international use of the renminbi. The article is notable because it sets out a clear definition of what that ambition requires. Xi pointed to the need for a more capable People's Bank of China, globally competitive financial institutions, and financial centers with enough depth to attract overseas capital and influence price setting in global markets. All right, anything else here? Some economists see Beijing trying to capitalize on a shifting backdrop in the global order. China's central bank governor Pang Gongsheng has also spoken about a future system where several major currencies share influence. And that's the multipolar world people talking, huh? Even so, the renminbi's role in official reserves remains small. The International Monetary Fund data shows the US dollar still makes up the largest share of global reserves, with the euro second. The renminbi ranks well behind at under 2% in the third quarter of 2025. Well, we'll see how that looks in 2040 and 2045. All right, guys, that's enough of that. All the articles are linked in the description. I think we are going to be done with that. We'll see how it goes. There's this blog post. I don't know if I want to read this today. It's quite long. Maybe I'll save this for tomorrow. So yeah, I'll save that for tomorrow. We got to move on, guys. Okay, let's see here. Oracle's credit default swaps are plummeting as financial plans boost investor confidence. If you remember Oracle, look at Oracle's chart. Oracle's earnings was one reason, or maybe the reason, that the NASDAQ got stuck, okay, at the end of last quarter. So from November into December, NASDAQ went nowhere. pretty much nowhere. And this is one of the reasons. Now, some people say like it was because Oracle's AI growth forecasts were not as expected. They overpromised in the previous earnings, and then this thing made it go down with the semiconductors taking a hit until Micron had earnings. So yeah, NASDAQ got kind of damaged at that point. But I read that Russell Clark article some time ago, and he was saying there was a lot of issues with the credit default swaps of Oracle. So they had, in the debt market, in the bond market, Oracle had some issues here. So today, this morning, they have a new debt plan, okay? And this allowed the credit default swaps to go down. So the CDS dropped 17%. That means it's a good news because people are not buying CDSs. When you have CDSs go up, it means they're buying insurance on the bonds. Basically, they don't trust your bonds anymore. They think your company is going to screw up and not pay interest. So they're going to buy CDSs to protect themselves. So they have no trust in Oracle. So here we are. Oracle's 5-year credit default swaps tumbled 17% after the software vendors plan to raise $50 billion in debt and equity, bolstered investor confidence that the company will be able to avoid a credit downgrade as it funds its artificial intelligence build out. Are all the companies just getting loans to build out their AI infrastructure? Is that a good thing? Are they overcommitted for this AI stuff? If there's a financial crisis and all these guys can't pay back their loans, will it make things worse? Sounds like 2008 all over again, doesn't it? Instead of real estate, it's AI. I think this bubble is going to blow us all to hell. Equity financing significantly inhibits the downside for credit. Andrew Kex, a credit analyst at Barclays, wrote in a note to clients on Monday. Kex upgraded Oracle's debt to overweight and said that its CDS should compress further. CDSs are like insurance for investors, with buyers paying for protection in case the borrower can't repay its debt. That's what I said. Oracle CDS soared late last year. Yeah, that's what I said too. On concerns that the company's massive data center commitments could damage its balance sheet, putting debt investors at risk. Oracle raised $18 billion in a jumbo bond sale in September, one of the largest debt issuance on record in the tech industry. Uh-oh. The 5-year swaps have been viewed by the market as a way for investors to hedge their bets on the AI boom. Oracle has been caught in a peak fear cycle for the past couple months, with the market reacting negatively to virtually any headline, wrote Kex. That's right. Stomach's weak. It's gonna puke. Any bad news could blow everything to hell. Oracle said on Sunday it planned to raise $45 billion to $50 billion in debt and equity this year to build additional capacity to meet contracted demand from its cloud customers, which include NVIDIA, Meta, OpenAI, and Elon Musk's xAI. Using equity as a lever is a notable signal to bond investors that the company isn't solely reliant on debt. So they're going to put out more shares of stock, keep those bond investors happy here. That's basically what it is. Okay. All right, here we go. Here's another article. Done. Okay, 1 hour done. We're not going to read any more after this. Steepening yield curve, good for small caps. So I said we're going to energy, we're going to oil, we're going to gas, we're going to small caps. Okay, we're going to small caps too. So those are the areas we're going. We're leaving the large cap tech stuff. Bye-bye. Now that the Fed has cut short-term rates several times, we are seeing a further steepening of the yield curve. It is tough to portray the entirety of changes in the whole yield curve over time, and so I am summarizing it in this week's chart by showing just the spread between 10-year and 3-month Treasury yields. So that's the black line here. The green line is the relative performance of the Russell 2000, which is a small cap index, over the Russell 1000, a large cap index. So this is the relative performance of small caps over large caps. So small caps did well from 1999 after the dot-com bubble, and 2011, the start of the large cap resurgence led by tech companies. Now, the last time we went down in this ratio when large caps dominated small caps was when? During the dot-com bubble. If the AI bubble is just a mirror of the dot-com bubble, then there's a lot of similarities. All right. Here. But of course, we didn't pop that bubble yet. That's the only difference. We didn't pop it. So I think we can ride the small caps before they get really popped. But we'll see. We'll see if how February, March, April, May does, right? The 10-3 spread does a really cool trick, which this week's chart illustrates. Changes in that 10-year to 3 months spread draw us a roadmap for what small cap outperformance or underperformance is going to look like. The green plot in this chart is the relative strength ratio of the Russell 2000 versus the Russell 1000. It is calculated by simply taking the numerical value of the Russell 2000 index and dividing it by the Russell 1000. The line goes up when small caps are outperforming on a relative basis, and it goes downward when the large caps are doing better. And the cool part of this trick is that the green plot makes those movements corresponding to what the 10-3 spread was doing 15 months before. We are getting answers ahead of time. So he pushed this black line up. Okay. So we're using this to predict the future now. All right. So far, this thing in 2026 is pointing up. So small caps are going to do a lot better than large caps. And I think it's true. I saw it. I see the performance since last quarter. I see it improve. It keeps on improving into this year. Okay. Now, they are not perfect answers, though. The nice predictive relationship can break down when the Fed is putting a thumb too heavily on the scale with actions other than interest rate policy. Uh-oh. What did we just read? We read that Warsh does not care about interest rates. He cares about the balance sheet. So, all this hinges on what the Fed does. And I have no clue what he's going to do. All right. Even when he gets in office in May, we probably still don't know what he's going to do until he starts talking. And he's probably not going to start talking in any significant way until June and July. So that's a problem. QE3 in 2013 caused a temporary inversion in the relationship. In 2020, the Fed started QE4 in response to the COVID shutdowns, which also disrupted the nice correlation for a while. The Fed is doing QE5 now, although, we are not supposed to call it that yet. So this is the problem. We're getting Warsh coming in. He's probably not going to continue what Powell is doing. So this quote-unquote QE5 we're doing now, which is not supposed to be a QE5, and we talked about this some streams ago. They called it in some weird name, and they said, like, that's not QE. But the magnitude of the Fed's recent purchases is a lot smaller than what we saw in prior rounds of QE, so the potential for skewing the leading indicator is likely much less now. The Russell 2000 to 1000 relative strength line bottomed in July 2025 and has been rising since then, as small caps have started outperforming again after a really long period of underperformance. Seeing what the 10-3 spread has been doing, its message is that we should expect small caps to continue outperforming for at least the next 15 months. We do not yet know the end point of that projected small cap outperformance because we have not seen a topping out of the 10-3 spread. So to be determined, right? To be determined. Think you'd be able to short or put the bubble as it pops, or would it happen too fast? I have no clue, man. Everything is different, right? Nothing is going to be exactly the same. If people are expecting like a .com to happen exactly like it happened in the .com bubble, I don't think so. Things are a bit way too different now. We have QE, we got balance sheet issues, we have inflation. Yeah, stuff that we didn't have before. Global orders changing. You have to remember the .com bubble happened during a time of globalization and bond market bullishness. So the bond market is no longer bullish. We're in a different regime. And now we have to worry about like the yen and the US dollar and all this stuff that we didn't have before. The yen carry trade is a big factor. So there's a lot of things that are different. So it's not going to be exactly the same for sure. And the hoarding of metals, you know, which is another different thing. Commodities did not have a bull market until after the dot-com bubble. So after the dot-com bubble popped, people were buying gold and silver and real estate. Okay, so yeah, so gold and silver were very underperforming assets during the dot-com bubble. That's not happening now. AI wants you to have more commodities. They need energy. They need water. They need silver. Okay, silver is a big, important component in a lot of electronics, solar cells, and other things. So, yeah, that's not happening this time. So there's a lot of differences. Okay, we're done here. All right, let's stop sharing this. Let's play a video. Take a break. All right. Let's see what do we gotta watch. We gotta watch. I think this is pretty funny.
Today, I'm distracted because of this bot. The AI has gone sentient. That's part of the news today. So I'm trying to install one for myself. And I'm trying to use Gemini to tell me how to do it. And I screwed up by saying to use Opus 4.5 instead of Sonnet 3.5, and now it ran out of tokens or something. So yesterday I bought silver. Hey, what a genius. Yesterday I bought silver. Yesterday was the day I decided to go out and buy physical silver, and I actually live streamed it and showed it to people. I could have gotten a lot more silver. Holy crap. Well, at least I think it's going up. No, that's not good. Let's see. Now it says it's 78 again. How'd that happen? So it's terrible. Terrible day. Oh, and this screen slows down my computer too. 70, is it really 78 again? Is it really? I'd have to check my app. It closed the day a little higher than 78. It says it's at 86 on JM Bullion, so that's positive. And it still says they're selling for $100. So at least it's not the end of the world. I got them for 120. So silver crashed today. I'll tell you guys why. I got to tell you about these robots taking over the world. And once I get it set up, I'm totally distracted because I was spending the whole time before the show trying to set it up, and it sent me one message on Telegram, and then it said something else. So silver closed at 85. Yeah, silver is apparently $86 now. It's because they announced a new secretary. It's because they announced not a secretary, chairman, Fed chair. It's because of the new Fed chair. So we have, I have some news for you guys today. We can talk about whatever. I can check in with the chat and stuff.
Too late. You bought at the high. But that's not the worst thing about it. This guy actually sold at the low. He sold like at $33 an ounce, and he bought it back at $120. This is insane. Here's the video. He's out there buying silver the day of the pop.
All right, so there's the tour. And I'll show you silver because Pirate Justin wanted to see the silver, so I'll show you guys what the silver looks like. We'll walk that vehicle. At least I did something. Yeah. Yeah, summer it gets pretty packed. Hey, thanks guys. You guys are cool too. I haven't done a walk and talk stream for a long time. So I bought silver. What's the price? Anybody want to tell me what the price is now? Hopefully it's gone up. I think they're going to run out of physical silver. That's what the insurance is for. If the exchanges run out of physical silver, then instead of everybody selling silver, everybody's going to want to buy physical silver. So even though the price might go down 50%, which it really might, I still bought some today. So was it 119 or 117, people say? 118? Everybody's saying something different. So for you, Pirate, you wanted to see what it looks like. So I'll show you what it looks like. Walking time. Look. I'll show you my Beanie Baby. That's my Beanie Baby in my car. I bought a car when I was insane, or I leased it actually, which was kind of stupid, but it's kind of a nice car. Oh, okay, here, I'll show you guys. Okay, so I got, for Katie, we got this, which is, this is a silk. Let's see if we can get good lighting on it. Let me take off my glasses so I can see better. So this isn't like a normal wrapper. This is from some kind of company. That's a 2004. It's a beautiful design. And everything has like a special meaning. How many stars and like what the eagle is carrying in each hand and stuff. So I got that. And then I got one. This is called the proof coin, which actually should cost more, but I got it for the same price. The proof is mirrored. So if you want one of these from the US government right now, you would have to pay, from the usmint.gov website, I think these are like $200 right now, or $180 or something. So this is the proof coin, which has a mirrored finish, but I got it for the same price. So that's good. Yeah, see, they're really nice. And then that W there means it was minted at West Point. So we have a number of mints in the country. We have a mint in Denver. We have one in San Francisco. We used to have one near the silver mines in Nevada at, I forget what it's called. If you get Morgan dollars, when you're collecting coins, when they're from different mints, why am I keeping these in my car? Well, it's safe around here. And then this is how you buy them in bulk.
All right, just to clarify. So this dude lives in Pismo Beach, Central Coast, California. That area is very like low crime, very low crime. So yeah, I guess you could keep your silver in your car, but for real, man, I don't know. That's ridiculous. Yeah, I wouldn't do that.
They come in tubes like this. So these hold 20 coins. So this is what it looks like. So these come from the US government, Treasury, United States Mint. And then you have 20 of these inside. I think I got 2016s or something. This year, 2026, is a special 40th anniversary year. So anyway, that's how they come. So nobody rob me, please. See, the problem with having physical is then you have to insure it and stuff. So I wouldn't want to have more than that, really, because then people will rob you. How much did I spend? I got them for $120 each. So I got them for $120 each, which is crazy because I sold them.
Yeah, it's crazy. It's definitely crazy because now we know that was a major top.
I sold a bunch of those last spring for about $33 each. So, and I think
So he had some silver before. and he sold it at 33 when it was just about to get to 40. Once you crossed 35, it was boom. I was like, yep, we're riding. He just sold just before it was getting ready to go. What the fuck?
And really, I really think they might crash. I mean, like I said, I almost turned around several times.
Well, yeah,
really
it
might
did crash.
But and I can't sell them. Now I can't sell them.
Yeah, because when you go to any establishment and you ask the guy, hey, if I buy from you right now, can I sell it to you the next day? And they tell you no. That means the owner already knows, like, hell nah. Whatever you buy from me, you keep. Because they know it's a damn top.
I wanted to. Yeah, at least at this coin store, maybe not anywhere. So, or at least not for close to what I bought them for. All right, Gina, good seeing you. So anyway, that's our silver tutorial for today. So yeah, if you want to buy silver, those are the best things to buy. That's all. They're the most liquid. People want them the most all over the world. Gold's at 54.76. Oh, good. Thanks, Rocky. Good. Yeah, everything crashed today. Everything crashed today.
Oh my god. I mean, the guy leases his car, so that already tells you the financial literacy of this dude. Okay, whatever. This is ridiculous. Oh fuck it. I can't. So, like I said, we go back to the beginning of the stream. I said, like, all you gotta do is be smarter than the average bear. You don't need to be the best trader in the world. You don't need to front run JP Morgan and Goldman Sachs. You just need to front run this guy. If you can front run this guy, you'll still make money. You might not make the peak amount of money in the trade, but at least you'll make yourself some money. That's all you got to do. Very simple, right? Should be simple. I mean, I don't know how much I got to laugh at this stuff, but it's like, it happens all the time. Every time there's a cycle, it's always the same. And so this is why reading charts work, is because people's psychology and behaviors never change. Even if I give textbook examples of like Sir Isaac Newton buying at the top, like supposedly the smartest people on earth, they're still governed by the same human emotions of fear and greed as anyone else. And as long as that's still true, reading charts is still useful. That's all you got to figure out. So, yeah, Sir Isaac Newton does a famous one. He bought some stock in some a holding company. I forgot what it was called, but it's a famous chart. Like, his friends were selling on the way up. I mean, his friends were holding. Okay, his friends were holding all the way up to the top. Like, he sold early, and then when he saw his friends still holding and still having that money, and he just got, I guess he just got envious and wanted to get back in. When he got back in, it was at the top. His friends already sold, and then everything crashed right after. So that's a famous example. You just look it up, Isaac Newton, like stock or whatever. So yeah, the smartest people doesn't necessarily mean like they make the most money. See, there's not a correlation there. There's not really a strong correlation. It's only like, you could say like, oh well, if you're smart, I guess you're theoretically on average going to make more money because you're going to have some kind of career that will land you a gig that actually makes high income. But as far as like making money, being a business person, whatever, you don't need to have that high IQ, right? I don't know, whatever. So Isaac Newton, stock market bullshit. Yeah, it was called the South Sea Company. The South Sea Company. All right. Here, let me get that for you. I think that's a good example. Yeah, this is a good example. Like, everybody should learn. Guys should learn this stuff. You know, learn from history, please, 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 please. Here. Isaac Newton famously lost a fortune during the 1720 South Sea Company bubble, a quintessential example of market mania. After initially profiting $7,000, Newton re-entered at the market peak, losing over 20,000 pounds. So 7,000 pounds. Did I say dollar? No, I didn't mean dollar. Roughly $3 million in today's money. He famously noted he could calculate heavenly bodies, but not the madness of people. That's where we're here. We're here to calculate the madness of people. Can we do it? If we can make some money. So George Soros already told you guys his thing. He calls it reflexivity. So that's one thing. So anyway, yeah. I think there's some people have some images of where he bought and where he sold with it compared to his friends. Like this one. Yeah, there we go. Oh. Here, do we have a larger image? I guess not. I guess I gotta read this low resolution thing. Newton invests a bit. Newton exits happy. Newton's friends gets rich. Newton re-enters with a lot. Newton exits broke. This is perfect. Yeah, man. So, you know what? Learn from history, guys. This is what happens when you become a R-tard right here. This is R-tard. So, and this is why you gotta read them charts, man. Read them charts. You don't want to be this. You don't want to do that. Okay. I mean, I don't want to be laughing at people's misfortunes, but it's just such a thing I hear all the time. Every time there's a cycle, you always hear these people have these stories of, or even stories of their dads or grandfathers and whatever. Same thing. Like they buy a stock, they get burned, they get mad, and then they never forget that loss or something. It's very psychological. Like you never remember your wins as much, I guess. Like people, when they lose something, they just they really fixate on it. Okay, it's crazy how the human mind works. It's like a lot of times it just goes against you. You just do things that are not good for you at all, and you keep doing it. It's crazy. It really is crazy. That's why you gotta listen to Universal Jones. If he's doing a lot of streams about psychology, definitely something to think about. But I think that field's kind of pretty hard. There's a lot of factors goes into people's minds. So trying to figure it all out, it's tough. Okay, time to look at some real charts. Let's go. Let's see. Let's get this thing going. Okay, hold on. StreamYard's acting funny. Okay. All right, working again. All right, let's do this. Something's came on my screener. I saw Freddie Mac and Fannie Mae. These are preferred shares. I've been seeing some interesting action since last week. So I'll talk about those some other time. So if somebody remind me about Fannie Mae, Freddie Mac. We got to get in this thing here. It's been dropping since October, but it looks like we found a bottom here at 10 something on Freddie Mac. So yeah, these are kind of like the penny stocks that might be worthwhile getting as we get a new Fed chief and all this stuff. Yeah, I'm looking at real estate type stocks. We're gonna have to see how that goes. That might be the place to hide out. But in any case, let's see what happened today. SanDisk. As you can see, after earnings, it had a pop. It lost a bunch of that, and then we recovered. Okay, so I don't know what this means. People still want to buy this thing even after earnings. I guess they're happy with holding that stuff. The steel stocks still improving. Steel up here, so Steel Dynamics, STLD up 3.89%. Nucor up 1.8%. Chart looks beautiful. So after earnings last week, we still see improvement. So even a drop, somebody is buying this stuff. So always look for stocks even after earnings. Look at it a week or two after. Look at how they behave. it tells you a lot about how it's going to keep going until next quarter. So I think I keep looking at steel. Now, looking at aluminum here, still dropping down a bit. So this probably means that there is no war. So if we all thought that Iran was going to get hit, I assume that for real, like a serious conflict was going to heat up after, then this would have kept going up, right? But this hasn't been going up since mid-January. So that means I think we're fine. I don't think anything about war is going to happen. So that's good for oil for now. So if oil drops back somehow below a little bit this week, then I'll be on the eye out of buying some oil companies. I'll also be looking to buy the oil leverage ETF if we hit a good spot. So UwU, OILU, is the leverage 3x ETF for oil production, exploration, natural gas production, exploration type companies. So all together in one ETF and leveraged up. So the UwU might be my new SOXL from last year. So this might be where I'm really going to park most of my money if I see oil in a trend. We have to see it in a trend first. I don't think I want to be jumping in unless I know this thing is ready to start moving in a straight line. If it's just going to keep goofing off here around 60 to something dollars a barrel, then I'm not going to really pay too much attention to this, and I'll just focus on single stocks. Okay, that's about it there. Okay, anything else here from last week? No. Okay, so let's look at the earnings for this week. So we had Disney earnings, terrible apparently. So we dropped to 104. This stock is not interesting to me. Ever since April, you see it goes down to 81, it goes back up to 122, and it just tapers off. This thing is still in this long sideways pattern since dropping from 2021. So $200 all the way down to a low in 2023 of $80. So it's still in this range. Not interesting. So I'm not sure what to say about this. Palantir had earnings. I think it's up 7% after the market closed. So let's say it gets up to 160 something tomorrow. I'll watch what it does. If it starts rolling over, like it's just going back towards 155, I might just re-enter my short here. Okay, so this still looks like a good short. I don't think this pop is gonna last. It's not gonna be able to get to 170 or whatever. NXPI reported earnings, so that's one semiconductor. It was down. Teradyne, kind of a semiconductor company. It does semiconductor testing. It has some robotics and AI. It did well. It's up 20% after the market. So this trend, this is one of the stronger stocks in the semiconductor area, is probably going to continue. Fabrinet, an optical company, down as well. So this one's down. So I don't know how that's going to fare for Lumentum. Lumentum will be the big optical company reporting to this week alongside Coherent. So LITE and COHR. So talking about stories, I had a friend who had a family member have a lot of money in Lumentum, and it crashed on him, and he hated this stock ever since, and he never wanted to get back into it. So if that dude bought it at $50 in April, it's up $400. I'm kind of wondering if this dude looks at this company and is tempted to buy while it's high, and he's going to go through the same trap. He's going to go chase this thing, and it's just going to roll over on him into May. So again, I don't take things personally. I don't look at stocks as a personal thing. If it goes up or down, whatever, if it goes against me, it goes for me, it's immaterial. This is not something to get passionate about, all right? So you should check your emotions at the door when you're trading. or investing. Rambus, this is a kind of a semiconductor company. It's mostly a patent troll. They buy companies that are about to go bankrupt. They take their patents. They start suing people. It's really a garbage company. I have no idea why it still even exists. But hey, well, it's down 20% after the close. So it's an interesting one too, apparently today. So for some reason, it would have been a good day trade, actually, if I knew it was going to do this. It went up 8%. It went back down. So you could have longed and shorted in one day. It went round trip. And then if you kept a short on it for the next day, it's down 20%. So whoever is goofing off in this stock probably made a bunch of money doing the round trip day trade plus short. Crazy. All right. Tomorrow morning, we'll have Merck and Pfizer, MRK and PFE. We also have Arthur Daniel Midlands. I think this is a fertilizer company. So I kind of like fertilizer from time to time, you know, depending on the food cycles here. We might be entering a time when people need to grow more food. This might get into more demand. It was also pretty good trade during the Ukraine crisis. Ukraine had a lot of chemicals needed for making fertilizer. Okay, nitrate, I believe, is one of them. We also have PayPal, I think, reporting. AMD and SMCI will report after the close, and Light. So that's Tuesday. All right, after the close. So those are the things to watch. Anything else? Let's look at how's the NASDAQ doing overall. It's looking like this. It's still above this box, rectangle, above 624. Looking okay to me. No signs of anything. S&P. It's still above the gamma flip line, I believe. Yeah, I think it's fine. Safe. It's safe. No problems here. And let's look at SOXX. Look at the semiconductor ETF. We're looking like a range is building up here. So above this 343 area to about 351 area, we're looking like a range. So this green candle, high volume, is interesting. It took a lot of volume to push it back up here. So if it rolls back over and it's very low volume, it's easy to push it back down, then that tells me that the people who were in this green candle were selling during the first hour of today. They were not buying. So that's a bad sign. It should easily just roll back over and come back down to 311. So I'm looking to short. Okay, I'm looking to short. That means we're going to look at SOXS. I tried this already before here when it got down to $1.90. It came back to $1.90 and went below it. I got out, and now I'm looking. It's back at 184. I'll try it again. Let's try this one again. So as long as it's below $2, I'm interested in getting in and building a position from here. Okay, so SOXS is 3x leverage short semiconductors. That's what I'm using to short it. You can short however you want to. You got puts, you got calls. You can sell your calls. You can buy puts. You can do whatever you want. And maybe you even want to use Micron to short. Maybe you want to short the big guys like SanDisk and Micron. Short these two. All right. Micron won't report earnings until way later. Way later. We got like maybe a month and a half before Micron reports. If these things start rolling over before Micron reports, Micron will probably just get hit just the same, and it'll be easy to roll over because people don't want to wait until Micron reports, right? And SanDisk up here looking very volatile. Volatility means there's a lot of people putting in options on this guy, which means it should be easy to pump, but also dump. All right, so there you go. What's up, Dalmatian? I'm wrapping up now. I think I talked about everything I need to. Oh yeah, MSTR. Looking at Bitcoin itself. Let's see. I did not get in my short again, so I got out here. Okay, so this looks pretty solid as a short because it could not get above this 78-minute 18 moving average line here. All the lines are going below 155. This is still below 155. Not a good look. It's going to 100. Okay, so let's look at the weekly. So 108 is the next target. If this thing can't pull itself together this week, yeah, that's it. That's it for Bitcoin. So like I said, probably Friday will be the last chance, right? Up until Friday, and then something happens in Japan on the elections, and then Monday we'll have a bad Monday. And that's probably what's going to happen, maybe. So this is pretty weak. This is a natural area where it stopped going down on Sunday right here. You see this candle, weekly candle back in April. The low here was like 74,700. So it touched right back there, and it's probably not going to make it far, and it's just going to roll over again, I guess. Okay, let me review what happened last night, a little bit on the futures. So most of the action was in the futures market. So you can see here, let's see, going into Sunday, Monday. So right after, let me change to hourly. I'm not using 78 minutes on here. So right after like 3 hours, you see this, you would have shorted. Couldn't hold like the 6,900 area. It tried to for first 2 hours, then the third hour it pulled right back down. You probably could have shorted the futures, gone all the way down here, and this level at 68,700. You can see right here, right? Like it was tested before in the futures. So it makes sense. Like right after that, you see it trying to move back up. So you probably would have got a long here and rode it all the way back up to 7,000, whatever. That's a lot of money. That's a lot of money. When you do futures, this is a lot of money right here, going down and up in this fashion. Yeah. And so by the time the market opened, it was done. You already did your round trip. If this thing happened during market, I would have done it. But because this thing went overnight, there's nothing to do. So I don't play the futures overnight. So that's it. That's a big gap. That is a hell of a lot if you can hold out all the way. Yeah. All right, guys. We're done with that, man. Let's see what happens the rest of the week. Looks like it's going to be boring because all the fun was happening Sunday to Monday overnight. We get no fun during the day. So that's why I didn't bother going in the morning. I woke up. I saw it was completed. I said, whatever. I woke up a few times. I was like, midnight Eastern. I was looking at it. Then I went to take a nap. Woke up like 3 a.m. Eastern, basically, and I saw TK streaming, watched it a little bit. And then I went back to sleep. Woke up like an hour before open, or 2 hours, and saw it was pretty much recovered. I said, yeah, that's what I expected. All the fun was happening overnight. So the Asian and European markets had their fun. We get nothing. We got nothing. Lame. Would you say the biggest takeaway are SOXS, short semis, and UwU? Yeah. That's what I'm looking at right now. SOXS, I'm only gonna do for like a week, okay, or 2 weeks. I don't think it's gonna drop hard enough to justify holding any longer than that. UwU will be the main focus for the rest of the year. That's it. Be careful shorting semis. Yeah, that's what I did. I already made enough gains, like going long. I can afford it. Fuck, man. Come on, 600% on SOXL. Who cares? I got money to burn. I mean, I already waste enough money with paying like stupid ass Thorpes and and Jeremy and all these people. What do you think I care? This shit. Yeah, who cares? Like, yeah. So, we got time, man. We got time. These things move like crazy. Maybe I'll do a cycles analysis of SOXS, like use 1 hour chart or something. We'll see. I don't know. I mean, it's just boredom. You know, I'm not like seriously gonna like put a lot of money in a short, but it's like I know like the market's gonna roll over. I can't do nothing until May to do new longs, right? So that spends most of my time. So when you're a real trading like connoisseur, you're not the guy who just goes every day trying to find a trade. I don't do that. I just watch it for a bit and I'm done. Like market open, I'll watch for an hour before, into, and after, maybe like, so 2 hours wasted. And then before the close, I'll watch an hour before the close, and that's it. I'm done for the day. And since I'm Pacific time, I'm done like at 1, right? And I have the rest of my day to myself. In the morning, I don't need to do anything, because by the time I'm done watching it, it's already 7 o'clock. I can exercise, do something else, goof off watching streams. And most people are in the Eastern time zone. I can align how I watch, you know, all the crap on YouTube for entertainment at the same time. So yeah, that's why it's easy. So I like Pacific time, honestly. I don't know how you do it Hawaiian time. I was in Hawaii a few times, and it's just like, dude, bro, that's too wild. That's too much of a difference. Makes no sense going to Hawaii and doing it, unless you like just trade overnight, go surfing during the day, go back overnight. I guess, you know, you could do it that way, but I ain't doing that shit. Fuck that. All right. Okay, any other videos to play? Let's play Kino Casino. What's they say about silver?
Press 1 if you were rug pulled today. The great rug pull of 2026 arrived. You know, all of us are like, oh my God, the world economy's there's chaos. The dollar's taking a shit. Everything's taking a shit. Let's invest into gold and silver. That's safe. It's a hedge against inflation and chaos.
What happened?
Gold and silver never goes down,
No way.
bro.
No.
Gold and silver fucking collapse. Suffer gold,
Yeah,
bro.
let's go.
Suffer silver,
Let's
bro.
go.
Oh,
I'm kidding. I'm
the
sorry.
silver,
That sucks.
Silver sisters, what happened? We were going to the moon. It was fucking parabolic, buddy. And now my silver stack is fucking worthless. Everything's
Do you have
worthless.
a silver stack for real?
The fucking Jews destroyed us.
This
But
is
yeah,
why,
Daddy
this is why
Jim
you have to invest in this,
Daddy
Ash.
Jim.
This
Daddy
never,
Jim, yeah.
this never goes
Oh,
down.
yeah.
This.
They only made so many chrono triggers. It's not like gold
In
where
perfect-
there's more of
in
it
perfect
every
condition?
day.
In perfect condition?
Oh my God, man.
You silver holders.
To be honest, we all
Okay, Jewel, so you saying PPP's voice is annoying or Warski's voice is annoying, or both? You know, Grace loves PPP. Actually, you know, they had a fuck, marry, kill, and she said like she would marry PPP. You know, of course she would say she would F her dad, but yeah, marry PPP. Yep. She loves, and it makes a lot of sense, you know. I mean, these Zoomers, they love this type of attitude. Yeah. So I was a connoisseur of PPP. I watched him before he became this way. So maybe one day, you know, Dead Man ain't streaming no more. I wanted him to cover the lore. I don't know if I can find like old videos, but the history of this guy on the left is fascinating.
I should have known it was. There is no way it could have kept pumping like that. But this correction, bro, they
So what
wiped out
happened?
like $15 trillion of value in like an hour.
What?
Like what?
But
the
okay,
fuck?
but what happened exactly?
Well, what happened is a bunch of Jews
What the-
decided that they were gonna rug pull everybody
Gabe?
and steal their money.
I knew it.
Is what happened.
When Gabe was DMing
Every
me
day-
about buying silver, I'm like,
They were
I
like-
know this is a scheme.
We all know what fucking happened. Gabe Hoffman made the call.
Mhm.
He's like, they bought it, dumped it. Like, this is once the normies started being like, oh boy, I'm getting into gold. They're all buying their worthless paper fucking gold voucher, their worthless silver gold. I own gold, Daddy. You don't own fucking shit. And you were painfully fucking spent today, buddy.
Speaking of financials,
Oh,
so ChatGPT
man.
f***ed up brutally, right? They're down like 17 billion. Did you hear Microsoft went down? What was it, 48%?
I saw Microsoft took
buy,
a
buy,
fucking
buy,
hit. It's like,
buy,
that's
buy.
what you. Are you buying the dip, buddy?
No.
No.
I don't know where they got that Microsoft number from. That's wrong. All right, so Dalmatian, all I heard was that her streams today were about you. I didn't catch any of that stuff. I mean, I tuned in, but I didn't like pay attention or whatever. But OPC clipped something where in one of her streams she said she did. I'm sure like she took down her other streams like those streams are gone. So I don't know what she said. But yeah, I assume she did. All right, you'll say you'll leave her alone. All right, that's good. I don't know. Yeah, you gotta ask those other guys. Those guys follow everything all the time, right? I'm already tired enough trying to follow like the Jeremy stuff. It's like, what the fuck? Everything keeps shifting out here. Okay, anything else? I'll save that for later. I'll save this in the next one for later. I think I wanted to cover some kind of tweet or something. Man, let me see if there was a tweet I wanted to cover, or several tweets. Let's see, and then I'll let you guys go. It's 2-hour show, good enough for today. We'll get ready for the rest of the week. Oh yeah, okay, this might be interesting. Okay, let me get a new window up here. Okay, and okay. All right, let's load it up. Yeah, I've been following some of Latino stuff. Yeah, I've been watching some of those streams back. I just don't have time anymore to be like, going on long streams or looking at long. I'm already have my hands full with all these people deleting all their freaking streams, and it'd be like, what the heck is going on? And half of the stuff is missing. You don't even know like the storylines. I get all confused, and people are dropping left and right. There's no more reaction channels, and you're like, damn it, you need reaction channels because I don't want to be watching whole streams of people. It's like, fuck, now I gotta screen capture everything, and so I can watch it back later when I have like free time. Really annoying now. Really annoying. All right, let me get rid of this. Let me get rid of that. Oh, this is why I need producers, man. Nope. That's not the window I want. Here we go. All right. Good. Epstein Files. All right, Epstein Files. This is huge. The individual who anonymously posted on 4chan the morning of Epstein's death, August 10th, 2019, claiming he witnessed weird happenings at the prison before Epstein's death, has been identified in the Epstein Files. I remember this time. I remember this. I was on 4chan and somebody there was claiming they knew something was going to happen. And within hours, he was dead. Or maybe he isn't dead. Huh. 4chan had the scoop. So let's see, who was it? Roberto Grijalva. What the fuck? Grijalva, an officer at the Metropolitan Correctional Center in New York, has been identified as the anonymous prison employee who posted on 4chan claiming Epstein left his cell Friday evening shackled in a medical wheelchair, while at the same time an unauthorized tip van arrived at the prison, which he believes took Epstein away the night before news broke of his death. The day after Epstein's death, U.S. Attorney Jeffrey Berman of the SDNY opened a grand jury proceeding and subpoenaed 4chan, Apple, AT&T, and Citibank for records aiming to uncover Grijalva's identity following the anonymous 4chan post. Grijalva's name is not redacted on his bank records, included in the SDNY subpoena response from Citibank for his 4chan post, and ties to the same prison officer, Roberto Grijalva, whose statements were released as part of the prison's investigation into Epstein's death. This is huge. We now have validation. The 4chan post from 8/10/2019, August 10th, is a legitimate eyewitness account from the MCC prison officer that Epstein may have been switched out before news broke of his alleged suicide. Oh, man! Oh, man! No, 8chan is different, Jewel. No, 4chan still existed then. 8chan is a side thing with like people that hated 4chan because they didn't allow you to post child porn or whatever. 8chan has his own drama. It was run by some dude from the Philippines, and then some crippled guy was the administration. So this guy is a quadriplegic, or not quadriplegic. He just can't have use of his whatever. They call him Hot Wheels. Oh man, you can look it all up. Anyway, oh man, all kinds of fun stuff here. All right, back to finance. Oh, let's see. Let me get this thing here. Okay. So, true inflation. So there's something called true inflation. Supposedly these guys have real-time data inflation, and now I read that article where all these guys are saying like inflation is going to peak, go up again, and true inflation is saying opposite. Now, how accurate is the quote-unquote true inflation? How accurate is this data source here? I don't know. I mean, I've heard of it before, but I never used it. So I'm gonna read this other thing here. Let's see. Okay, and we might finish this off tomorrow because it's already 2 hours. I'm not gonna read this stuff here. So, credibility problem. So this is from the market monetarist. The Fed isn't convincing and true inflation isn't true. So this guy doesn't believe in true inflation. Today we got the U.S. CPI number for January. So this was written when? I don't know. It's just, I will screen capped it today, or something. Yesterday. This thing doesn't have a date, huh? Okay, let me see. February 13th, 2025. Okay, it's pretty recent then. So this is fresh. Both headline inflation and core inflation came in higher than expected. Headline inflation, blah, 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 blah. This is hardly good news. However, we should be very careful about drawing too many conclusions from month-to-month changes. This is why I've taken a broader view. I've looked at 1, 3, 6, 12-month growth rates in both CPI and core CPI annualized and combine all these into a single number. This approach should help filter out the noise in the data and capture the underlying trend. You can see this in the graph above, where I show the deep CPI trend against the Fed's 2% target, along with the range of 3-month moving average inflation rates. Okay. What we observe is what I call the deep CPI trend was falling after an inflation shock of 2021 to 2022, but we never quite managed to return to 2%. Just as we were almost there about 6 months ago, the deep CPI started to move up again. We're now almost at 4%, far above the Federal Reserve's official inflation target. We're seeing something similar in consumer inflation expectations, which have become stuck above 2% and have recently increased sharply. All right, some thoughts on true inflation. When the truth isn't so truthful, many of my readers have been asking me about True Inflation Index, which, despite its name implications, might not be telling us the whole truth about inflation dynamics. True Inflation is a digital platform that calculates inflation in real time by gathering data from a wide range of sources. It uses blockchain technology to ensure transparency and accessibility for everyone. The goal is to provide a more dynamic, up-to-date picture of price developments in the economy. The index is showing a rather different picture, with inflation dropping sharply, but there are good reasons to be skeptical. So this has happened before. I've long been an advocate of using high-frequency indicators in monetary and economic analysis, and I was initially quite excited about true inflation and have often used its data. However, I'm becoming increasingly skeptical about its methodology. The main problem is that true inflation adjusts the weights for different commodity groups monthly. This creates significant jumps in the data, particularly visible at the start of each month when these weights adjustments take effect. Okay, so that's the problem there. So it's dynamically adjusting the weights. The Fed only changes the weights from time to time, okay? So that's why you have a lot of websites talking about how the Fed has shadow like information or whatever. Okay. I might get into that some other time. Okay, that's a whole nother game, another time about it. All right, 2 hours, 3 minutes, done here. You know about NSA, Ghidra? You have the PSYOP version, respectively. I don't know anything about that. If you guys know more about 4chan or 8chan or all that stuff, I don't know any of that. That's all I know. I just know 4chan was a place where I went to go shitpost, and then something happened where these guys broke off and made 8chan. There's another guy, you can look him up, Gahul. Gahul made his own like chan called TV Chan. So whoever's still in chat, who knows the sphere I come from, would know him. He also has some lore on 8chan and whatever. Those guys played around in those places. I don't know any of that stuff. I rarely went on 8chan when it was made, so that's it. Yeah, Gahul. So no, I wasn't a hardcore Chan guy. I was just on 4chan. That was it. Most of the time I just read stuff. And then shit post from time to time, but most of the time I just read stuff because I like to see what bullshit people are stirring up, you know, and memes too. Memes are always good. But yeah, I'm probably not the guy. You can talk to other people. They probably know more. But I'll put these posts here. Medium. Okay, tall. Okay. Yeah. So you guys can see some of those comments here. And I'll take this off. Easier to read. But I don't know. We might have to find someone who knows 4chan, 8chan, and all the Chan histories. 2chan. There was 2chan, right? The Japanese Chans before the American ones. So yeah. And we also got more information about Moot and all that too. Like, let's see. I covered that before. I don't know if there's any more information. I mean, I know Asmongold has talked a bit about it. But it ties into the PPP stuff too. So the fat guy you were talking about and all that, all of these people came from the same circles, you know? They all go around the Gamergate, all that stuff. All that stuff is also tied to 4chan, Reddit. Oh yeah, Reddit has earnings this week, so maybe it's time to short Reddit. I think Reddit's about to die, actually. Remind me about Reddit, because I had some guy was tweeting about it, saying they know like their data isn't being sold to AI anymore. Like nobody wants Reddit data anymore. So the reason Reddit stock like was really good last year was because they could sell a lot of their data to other people for high prices. I don't think they can do it anymore. So maybe that's a short. Maybe if you guys are interested in shorting a company before earnings, that's one to look at. But anyway, good night, folks. We'll see you next episode.